makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. U.S. President Joe Biden is set to visit Israel tomorrow in what's been called a, quote, critical moment for the region. Russia's Vladimir Putin arrives in China on a rare international trip for talks with Xi Jinping as the U.S. presses Beijing to help reduce tensions in the Middle East. Plus, the pound lower after UK wage growth eases, indicating a cooling of the labor market and falling signs of persistent inflation. So we'll have a full roundup of all of our top stories. This is how they're playing out in the European markets. Now, we're seeing stocks pretty much fluctuate quite a lot. The focus firmly also on what's happening with treasuries. We heard from one of the Fed presidents on the impact that these rising rates have had, of course, on some of the smaller businesses. Now, stocks are rising pretty much, bonds pretty much down amid diplomatic efforts, again, to prevent the Israel-Hamas war from expanding into regional conflict. So I'd always watch for treasury. You can see U.S. 10-year yield above 4.7%, and the yuan, of course, is oil declining a touch after last week's rally. Now, the U.S. President Joe Biden will travel to Israel tomorrow in a bid to prevent the conflict from engulfing the region. The visit comes as Gaza braces for an expected ground offensive.
He's coming here at a critical moment for Israel, for the region, and for the world. And he's coming here to do the following. First, the president will reaffirm the United States' solidarity with Israel and our ironclad commitment to its security. Second, President Biden will underscore our crystal clear message to any actor, state or non-state, trying to take advantage of this crisis to attack Israel. Don't.
Well, let's get more from Bloomberg's Oliver Crook in Tel Aviv. Ollie, so tell us more about Biden's trip and the latest diplomatic efforts.
Yeah, so he will arrive tomorrow. He will arrive in Tel Aviv, and this is part of a sort of three-pronged approach, one of support for Israel, one of deterrence of Iran and other actors, and a third of diplomacy. So let's start first with the question of support. So there's a question of financial support. We understand from the New York Times reporting that Israel asked for $10 billion in emergency aid. There's military support. That's part of the deterrence factor here, where we have the second aircraft carrier group that has entered the eastern Mediterranean. But then there is the diplomatic side of this. So the first part of the trip is here in Tel Aviv, but the second part is into Jordan, where he will be meeting with the Egyptian president, El-Sisi. He'll be meeting with the King of Jordan, King Abdullah, but then he'll also be speaking to the Palestinian Authority president, Mahmoud Abbas, who presides over the West Bank. And you have to imagine that number one in those conversations is going to be, how do you get aid into Gaza, where the situation is swiftly deteriorating, as it has for a number of days. We've got news lines just crossing over the last few minutes from someone close to Netanyahu saying that they are intending to open the border crossing at Rafah with the southern border of Egypt, where there are literally tons of goods waiting to enter. We do not know when that will happen. We've been waiting for a development on that since yesterday. But again, that is rhetoric still. That aid is still not crossed through, and it's coming at a time now where we have the death toll in Gaza that is approaching 3,000 people.
And what's the latest on the war effort, Ollie?
So we've had aerial bombardment, as we know, for the last week. We understand that that's also had some naval bombardments coming overnight, targeting Hamas targets, according to the Israeli Defense Forces. And we know that the ground forces are there. They're ready to go. They're ready to act on the next stage of this, which we understand will have a ground component. When that will happen, we do not know yet. And we're trying to get an idea of what shape this war will take going forward. We had some hints from that from the Israeli Defense Minister last night, who spoke alongside Anthony Blinken. Have a listen.
This will be a long war. The price will be high, but we are going to win for Israel, for the Jewish people, and for the values that both countries believe in.
A long and costly war, they say. Their preferred option, we heard from advisors, is not to occupy in Gaza. And again, the final question, and another important question, is will this remain a one-front war with the Iranian rhetoric really sharpening and continuing skirmishing on the northern border with Lebanon?
Ollie, thanks so much. Oliver Crook there, live in Tel Aviv, of course, following this very, very closely. Now, Treasuries declined and demand for safe havens is dwindling as the U.S. ramps up efforts to contain the Israel-Hamas conflict. Yields on the U.S. 10-year climbed above 4.7%. Gold and oil dipped. Joining us now for a look at the markets is Geraldine Sundstrom, Managing Director and Portfolio Manager for Asset Allocation Strategies at Pimco. Geraldine, as always, thank you so much for joining us. There seems to be a belief in the markets that not only does this conflict not escalate, but maybe the president can make a difference. Joe Biden, when he arrives in Tel Aviv, how are you expecting markets to behave in the next couple of weeks?
The market, like us, will be observing, a horrific yet very fluid situation for signs if this conflict remains contained the way it is currently, or if it broadens in the region. So far remains contained, and that's why markets have decided to move on and look at macroeconomic data and central bank like they have been before.
Overall, and I know you put it in your market insights, there's this push, and pull between resilient economic data, but of course the tightening of financial conditions, and it's unclear where that ends.
Yes, I mean, there are risks on inflation. We see the stickiness. We know that there might be, a bit of inflation going back up. The labor market is still very strong. And then we have the term premium, which is being, rebuilt at the back end of the curve. That said, we think that bonds here remain attractive. The yield is attractive, and especially relative to other asset class. It feels like something safe, given that we are not completely out of the woods in terms of a market slowdown in the economy.
So what does it mean, Geraldine, for example, when you look at treasuries, and I know, the Fed has done a couple of things. We're looking at treasuries, the 10-year above 4.7 right now. It's gone higher, but is there a comfort level that the Fed will try not to breach?
Well, certainly they have to weigh both. The term premium being rebuilt as a normalization is something that, had to happen in some way. We have quantitative tightening happening. We have more volatility in inflation. But of course, they have to be cognizant of this. They are going for this higher for longer. And eventually, we think that the economy is already slowing and is going to slow down some more from here. So probably a watch and see attitude, and letting the times do its work is the preferred way. Of course, if there is a resurgence of inflation, they have made it clear that they will be ready to act. So at this stage, it's probably a toss of a coin if they hike one more time, or if the data gives them the possibility to just watch and see.
What's your biggest concern, Geraldine, right now about the U.S. economy?
Well, we'll have to see what's happening in terms of the labor market, even though it's a lagging indicator. Certainly, strikes, wage pressure is something that the Fed will be looking at. This is going to have quite a bit of an impact on inflation developments ahead. So this is something that probably we have to look at. We would need to see some weakening in the labor market to gain comfort that the disinflation we've seen in the last few months can indeed continue.
So, Geraldine, where do you see, when you're building your portfolio, where do you see the biggest value right now? I don't know whether you do thematics and whether that's still the right way of analysis, or whether you just also need to look at region by region.
So a little bit of both. Certainly what we like at the moment, and that's an overarching thematic across our portfolio, is quality. We do see an economy globally that is slowing down. And yet when we look at the stock market, for instance, earnings expectations are actually upward sloping. So there's a bit of an inconsistency there. So we tend, when it comes to equity or fixed income or credit, to really go on the cautious side and go for quality. So it means investment grades, it means more defensive, more quality equities in portfolios. And then, of course, looking and starting to look more into secular thematic. which will grow no matter what. The energy transition will occur even if we have a recession. And this could be areas of the market that do get some support when the economy finally slows down. And all the more than year to date, they have performed very poorly.
So, Geraldine, also given all of the uncertainty out there, what does that mean for volatility? And do you buy VIX? Do you buy something else?
Well, volatility is likely not to go away, especially with this second war opening and the uncertainty that this brings. So one thing that we like doing, in fact, is we find the volatility in the option market, on the equity market, not that high. So this allows you to buy protection to the downside in case we would have a hard landing, because clearly the one market that is priced for, I would say, not even a soft landing, but a reacceleration of the economy is the equity market.
Geraldine, thank you so much, as always, for joining us. Geraldine Sundstrom at Pimco. Now, coming up, U.S. President Joe Biden heads to Israel as Iran warns that an escalation in the war is becoming inevitable. We'll bring you the details next. This is Bloomberg. Now, we're getting reports from Lebanese state media that the Israeli army is striking villages in South Lebanon. It comes amid concerns that the Israeli-Hamas conflict is escalating. Iran has warned that an expansion of the war is becoming inevitable. Meanwhile, the U.S. President Joe Biden has announced he will travel to Israel tomorrow in a bid to prevent the conflict from engulfing the region. Well, joining us now for more on this is Roxane Farmanfarmaian, professor of modern Middle Eastern politics at the University of Cambridge. So, Professor, thank you so much for joining us. We watch this terrible conflict. Everyone's watching to understand whether it escalates or whether there are signs that this could be de-escalated. We know that Vladimir Putin is in China. We know that Joe Biden will travel to Israel tomorrow. Are you optimistic about a more peaceful resolution?
Not particularly. I think there are some good signs that there may be a breakthrough and humanitarian aid may be allowed to be sent into Palestine, which is the Gaza Strip, which is good news, and that possibly those with foreign passports will be allowed out, although the crossing certainly is still very damaged. But I think the larger picture is we're beginning to see the different world powers go into their different sides, and I think this is spotlighting a difference, a divide in global perspectives that we're seeing on the one side. Russia, China possibly, certainly on the side of the Iran, possibly even Qatar group in the Middle East, and then the U.S. and Israel on the other. And we're definitely seeing from Biden's body language, I would say, that the trip through the Arab states that he took whirlwind over the last couple of days is indicated to him that the Arab states are standing very secure on this at the moment.
So Anthony Blinken actually made this whirlwind tour for 6-7 days. Is it China that could really make a difference? Is there a nation that could really make a difference?
I don't think China at the moment. It has simply not played a large enough international global negotiating role to be able to have the credence, the credentials to make a huge difference. I think it's very interesting how over the last few weeks, if not year, the interaction between the Ukraine war and the Middle East has definitely had a rumbling impact on each other. And now I think that the role that Putin might play could definitely make a difference here.
How critical are the next couple of weeks? Again, I don't know whether President Biden is going because he really thinks that would make a difference, or whether it's more of an act that there's nothing left to try and solve this.
Well, I hope it's not in order to, as a third option, possibly give Israel a sense that it will be supported against a larger escalation. I think that there's definitely a possibility of that. The fact that Blinken has warned other states not to get involved, says don't, while meanwhile it is Israeli forces that are beginning to hit Lebanese territory and also wiped out Syrian airports. So it's clearly not a symmetry here. And I think Iran is putting forward its own warning because in many ways it's speaking to the Arab world in saying this is our neighborhood. And we are following international law, or anyway, that's the way it will be interpreted, that we don't want civilians further hurt. And so I think we're really seeing these two sides beginning to grow as discourses of conflict.
But if the U.S. and President Biden gives, of course, Israel unwavering support, no matter what happens in terms of a humanitarian crisis, will he lose allies?
That is certainly a good question. And I think the fact that this has thrown the plan that the U.S. had to broaden the Abraham Accords, to bring Saudi in as an ally or at least as a normalization with Israel, that obviously has gotten waylaid. And I think partially it is also an interesting spotlighting of the fact that many of the leaders that signed those accords did so out of alliance with the U.S., but their people were not in support of that. And now we're seeing actually a similar divide actually in Europe, where all of these demonstrations are taking place in every major city and capital to support the Palestinians, and this does not reflect the policies of their leaders. So this is a divide that goes from the top right through the populations we're seeing of not only the region but the world.
So what are the chances actually that President Biden does that, also given some of the images that are on social media?
I would say that he's at the moment in a very difficult spot because he proclaimed absolute support for Israel and its right to protect itself, but then perhaps not quickly enough emphasized the importance of doing it according to international law. And I think that's the sticking point which could really move a much larger regional conflict forward.
Does President Putin actually benefit from this conflict? He's traveling to China and meeting with the Chinese president tomorrow. Yes,
he is. And benefit, I think, is quite difficult to draw straws on at the moment. But I think that certainly cements their relationship in terms of dealing with another location, another flashpoint. And I think it probably also further strengthens the global south, even, of course, he's not the global south, but if you understand my meaning, those that are the rest. And I think that is something that they have been looking forward to trying to find purchase. So I think there's a good chance that they will be developing a perspective, again, quite anti-American. And I think Biden will have to play his cards very carefully.
All right, Professor, thank you so much for joining us today. That was Roxane Farmanfarmaian, Professor of Modern Middle Eastern Politics at the University of Cambridge. Coming up, will UK wage growth easing take some pressure off the Bank of England? We'll discuss that next. And this is Bloomberg. Now, UK wage growth slipped in the 3 months to August, indicating that a cooling of labour market pressures is here. Joining us for analysis, our UK correspondent, Lizzie Burden. So, Lizzie, good morning. If you break down the data for us, where does this leave the BOE?
Well, the pound dropped off the back of the data, so markets seem to think that it means the Bank of England isn't going to hike again. If you break down those numbers, average weekly earnings fell more than expected, but then if you strip out bonuses, it came in line with expectations. So you're exactly right. It does kind of signify this continued cooling of the labour market. We heard from the Chancellor, Jeremy Hunt. He's talking about the political perspective. Inflation's falling, real wages are growing. So in that sense, it's good news because people have got more money in their pockets, and people will be happy to hear that more hikes may not be on the way. But there is this divide at the Monetary Policy Committee about how much previous hikes have fed through. So you've got the chief economist, Hugh Pill. We heard from him yesterday. He thinks it's about half. The big dove, Swati Dingo, reckons it's about a quarter. And that's why he reckons, or he hinted yesterday, that maybe more hikes will be needed.
So there are a couple of other, I guess, pieces of data that we're looking at.
Yeah, exactly. The big number tomorrow is CPI. That's expected to tick down down in the latest data from 6.7% to 6.6%. But I really should highlight that we've been only treated to a partial view of the labour market in this data this morning. Actually, it's a bifurcated set. So this morning we've had payrolls and wage data, but we have to wait for the employment and unemployment numbers next week. It's because the responses haven't been good enough, the ONS says, and that's why it's skewed the results. So unemployment next week is actually perhaps more important for the market.
Lizzie, thank you so much, as always, for some great reporting. Lizzie Burden there with the very latest on UK data. Now, we'll also be covering, of course, all things, as we do, UK every week on Thursdays at 9:30 a.m. London time in our half-an-hour special. Now, in the meantime, Rolls-Royce reducing some 2,500 jobs to extend their efficiency drive. I think we have a share price for Rolls-Royce. That's the price of crude, also extremely important because it gives an indication on whether the escalating conflict in the Middle East could happen. But Rolls-Royce, you can see they're gaining some 2%. Now, oil steadies as President Biden commits to visiting Israel to contain the crisis in the Middle East. We'll have more analysis next. And this is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, EU leaders will meet today to discuss a common approach to the Middle East conflict. That's after the bloc announced a humanitarian aid bridge out of Gaza, with 2 flights expected this week. Let's get straight to Bloomberg's Maria Tadeo in Brussels for the very latest. Maria, European leaders have been criticized for erratic policy on this issue. What can we actually expect from them today?
Yes, Francine, and responding to that criticism, you have this meeting today, which was not on the agenda. It is extraordinary. There will be a video conference, as you say, by the EU 27 leaders this afternoon. And the goal of this conference and this video conference is to establish essentially a joint position. By now, it is very clear, though, that when it comes to Israel, the European Union has said, just like the United States, they stand with the country. There is no justification to what happened in the country by Hamas, and it has to be condemned in the strongest terms. The questions, however, they have to do with what to do with the humanitarian aid, this potential crisis that they're facing, especially as people try to leave Gaza and they're not able to do so. We've seen that the European Commission has now said it will triple now the humanitarian aid that will go into the Gaza in particular. We also have the situation with the hostages that are still trapped. There are European nationals, and the EU has an obligation not just to track them, but also bring them back, hopefully safely. And then, of course, there's a question about the escalation in the region. The European Union has said they do not want to see escalation in the region. The question, however, is whether they have the soft power and the credibility to really have a voice in this conflict. And so far, as you say, Francine, it has been very erratic over the past 7 days.
Yeah, Maria, the EU's Ursula von der Leyen was also criticized after her trip to Israel. So is her job under pressure?
Well, her job under pressure this time, no. That's a short answer. But there are questions about her credibility, and there are questions about her renomination for another job as the head of the European Commission, another term. As you know, of course, this goes back to that trip that she made on the Friday. You spoke with the Israeli ambassador to the European Union. He said that really meant a lot to the country. A spokesman for Ursula von der Leyen insists that she does not believe she made a wrong judgment call by going into the country, that she wanted to express the solidarity. However, in the European political sphere, there has been criticism that perhaps she appeared too one-sided, that she should have mentioned civilians, that she should have mentioned humanitarian aid. A spokesman for von der Leyen did tell me there are private conversations that you do have. The fact that you don't make them public doesn't mean that you're not having tough conversations when it comes to Netanyahu. Too, they also say that this was a call that she made and still believes was the right call. Having said that, a number of European capitals do believe that she may have exceeded her mandate, and now it's time for European leaders to set the agenda when it comes to this crisis.
Maria, thank you so much. Great reporting, of course, on the ground. Maria Tadeo in Brussels. Oil steadies as the U.S. intensifies diplomatic efforts to contain the crisis in Gaza. Joining us now for more is Louise Dickson, oil market analyst at Rystad Energy. Louise, thank you for joining us. I guess it's a very, very peculiar week where the markets, certainly the oil market, is looking for possible escalation, but for the moment not doing that much. What are you looking for in terms of how this could escalate? So the fact that President Biden goes to Tel Aviv tomorrow, will this de-escalate or does it have the potential to flare up?
Hi, Francine. I think that de-escalation is the theme of this week, and that is coming from all different political sides, whether that's Washington, Jerusalem, or Tehran itself. So I do think that that's why we're sort of seeing this $90 per barrel, a bit more of a settling towards that price. Because, listen, the markets, if we're looking not only at crude, if we're looking at S&P, if we're even looking at the strength of the U.S. dollar, none of these indicators are really pricing in an extreme escalation of this conflict.
Mm-hmm. So, Louise, when you look at the oil market today, it does seem that it's maybe not as dependent or focused on the Middle East as previously. Is that because demand overall worldwide is holding strong?
Yeah, we do see sort of the demand globally post-pandemic still on a steady trajectory. And your question about whether is the Middle East the key linchpin in the oil market? Yes, it is. OPEC is still very relevant. Iran is OPEC's third biggest producer of oil. And were the conflict to escalate, this would, of course, be a very material impact on the fundamentals in the market. However, there are so many other producers and marginal suppliers to the market that are able to sort of step in the case that OPEC itself decides to lower production, or if production comes off voluntarily from Iran. And even evidence of this we saw develop in the last couple of weeks. We've seen the U.S. even engage with Venezuela, and these talks could even bring another 200,000 barrels per day back to the market. So the oil market has a lot more supply levers and actors than it did if we look back 30 years from today.
Louise, how difficult is it to make the case that actually oil could go to 150 from here?
Listen, Francine, it's October. October is a shoulder season. So let's even rewind 2 weeks to before the invasion, or before the conflict sort of re-erupted in the Gaza Strip. We saw crude lose $10 in 10 days. And this has been a combination of not only just the murky macroeconomic environment, which we've known about for years now, but really there's just this physical weakness in the market. So across the board, the refined products from distillates, so if we're looking at diesel or jet fuel, or even if we're looking at gasoline, across the board globally, we're seeing weaker refining margins. And that is actually from the physical side, driving crude a bit lower. I mentioned October. October is the shoulder season. So if we are seeing, if we're going to talk about even $100 oil or $150 oil, if we just statistically look at seasonality trends, October would not be the month to make that call. As well, we're seeing a lot weaker demand, especially out of the petchem sectors, especially in Europe. So that's going to keep a weight down even in the naphtha market. So across the board, refined products, until we sort of see a turnaround after the shoulder season, we can expect that $150 oil is not in the cards.
Yeah, Louise, I mean, I guess the concern, but this would be pretty extreme, is that something happens with Iran, that Iran, who has also, I think, been putting more barrels of oil possibly on the market than is said, could no longer fulfill that role, or whether something happened with the Strait of Hormuz. But how big a conflict would you need for that to happen?
I think Iran is, and Iran is the linchpin, and this isn't original analysis on my part. Everything depends on what Iran does. And I think first of all, we haven't seen Tehran take any credit for the attack. We've seen really de-escalatory steps from their side. And I think that they're kind of looking at the longer term. As you mentioned, in the past 6 months, we've seen Iranian crude exports incrementally increase. And I think that they're happy to have their barrels back on the market, especially in a $90 per barrel price environment. And again, they're looking ahead. 2024 is the US election. 2025, they have a renewal of their expiration and then potentially renewal of their nuclear deal, which would allow them to not just bring another couple 100,000 barrels back on the market, but even millions of barrels back on the market. So I think that it's, at least our assumption is that, Iran is going to be playing sort of the safe long-term game.
Mm-hmm. Louise, thank you so much for joining us. Louise Dickson there, Rystad energy oil market analyst. Now, coming up, the Russian President Vladimir Putin arrives in Beijing for talks with Xi Jinping, so we'll discuss the significance of this visit next. This is Bloomberg. Now, the conversations that matter, the insights you need. This is a Pulse. I'm Francine Lacqua here in London. The Russian President Vladimir Putin has arrived in Beijing for the third Belt and Road Forum. For more, let's bring in Bloomberg's Asia government reporter Rebecca Chung-Wilkins. Rebecca, can you actually explain, first of all, good morning and good afternoon, but can you explain the backdrop to this meeting between Vladimir Putin and Xi Jinping, given the current geopolitical pressures, high stakes?
Absolutely high stakes indeed. And when Vladimir Putin was last in China, he walked away with this famous so-called no limits relationship. Less than a month later, he had launched that invasion into Ukraine. And in the 20 months since, we've really seen Russian dependence on, and its economy dependence on China increase, touch nearly every part. So exports from China to Russia, even while they fell globally, jumped about more than 50% to Russia. We've seen the yuan making up about half the value, nearly half the value of all FX trading in Moscow, and shipments from Russia to China of coal have more than doubled since 2020. So we've really seen this increased change in dependency. And, it's arguable that it's never been clearer that Russia has indeed become the sort of junior partner in what is often described as sort of this bromance between Vladimir Putin and President Xi Jinping. But it's not entirely straightforward for Beijing because the longer this goes on, there are clearer costs for Xi, particularly as he also tries to stabilize ties with an increasingly antagonistic US and European nations.
You also wrote, Rebecca, in the Big Take article today that yuan accounted for almost half of the value of all foreign exchange trading in Moscow this September. So what does this show in terms of the economic and political isolation of Russia and China?
Certainly, well, Beijing is in many ways sort of Moscow's way out or some kind of relief. And while Beijing has been careful not to offer any kind of military support that explicitly breaches the sanctions under Russia, it's certainly helped ease the outlook. So, for example, Russian goods dramatically fell after the war as certain Western firms fled the country. And China, in its stead, has imported things like cars, mobile phones, and other white goods to try and help make up that shortfall. And the UN too has been really important in helping Russia find an alternative for some of its international payments. And really, in fact, the war and Russia's isolation has probably done more to internationalize the UN than decades of policy making in Beijing.
So while this forum, I guess, Rebecca, brings leaders from the international community to China, we also have Country Garden in major trouble over debt. So what about China's domestic issues?
Yeah, indeed. And I think it's China's domestic issues that are causing some to sort of pause and reconsider the relationship with Russia and precisely whether they're willing to tolerate those costs. I mean, China is dealing with a very challenging situation at home. The economy is a huge issue. We really still haven't seen the bottom yet. CPI, consumer data, still weak. property data, crucially, for that the 8-day holiday, the Golden Week holiday, which should have been a boost for property, we saw sales slump 17% compared to a year ago, not least again in domestic politics. Xi Jinping, we've seen, the apparent ousting of Foreign Minister Qin Gang, of the Defense Minister Li Shangfu. There is a lot of turbulence at home for President Xi Jinping, and there is this question of, as he tries to sort of steady things and stabilize things at home, whether he also wants to risk the fallout of his cozy ties with Putin, risk aligning himself too closely with Putin and somehow being drawn into that isolation. All of that, of course, is now happening under this extra added pressure of the Israel-Hamas war. And we have seen calls growing from the Palestinians, from the Israelis, and even from the US for China itself to take up a bigger role. So China is finding itself really at the center of sort of the shifting balance of powers, whilst it juggles its increasingly sort of febrile situation at home too.
Rebecca, thank you so much. Rebecca Chung-Wilkins, their co-author of today's Big Take with analysis of the Russia-China relations, live from Hong Kong. Now, earnings season continues in force today for U.S. banks, as Goldman Sachs and Bank of America report a little bit later today. Well, here to take us through what to expect is Bloomberg's Charlie Wells. Charlie, first of all, we had a lot of stories. Goldman Sachs has been in the news a lot, but this is also the chief executive who will step down from some DJing gigs.
Yes, that's right. So David Solomon famously played a lot of high-profile DJ gigs. It seems like he is going to step away from that, according to some reports. And look, Goldman is going into its 8th consecutive quarter with expectations for profits to be down. And so the expectation for earnings per share compared to the same period last year, down 34%. And I think this bank has had challenges, and we know that Goldman Sachs is a investment banking powerhouse. The question a lot of analysts are going to have today is, when's the power coming back on? Is there pent-up demand for IPOs? We saw a flicker this autumn, but is that going to continue? And I think that's the big question today.
Yeah, and it's difficult to know because of geopolitics, actually how much business sentiment can take a hit from here. So you could potentially see green shoots. And then, again, a lot of concern going into the winter.
Exactly. I mean, is this a moment where companies want to risk going public? Is this the sort of time when, companies want to do these deals? We saw very similar chill factors after the Ukrainian invasion. So that certainly is a concern, and that could take a hit on Goldman.
So, Charlie, when you look at the different U.S. banks, they're all different. Who's coming up trumps?
It's a really good question. So Bank of America is also reporting today. Not great expectations there either, but for different reasons. I think net interest income is this theme that we've seen throughout this week. It was a huge boon for J.P. Morgan. They got a 30% boost. Wells Fargo got an 8% boost in net interest income. For Bank of America reporting in just a few hours, the expectation there is just a boost of 2%. So I think there's questions there about loan demand. There's questions there about, deposit competition. I think that's something that the American consumer has a lot more options these days, which puts pressure on that very important revenue figure for these banks.
What else are we looking at? I imagine that it's the small and medium-sized enterprises that could take the biggest hit because of rising interest rates. And is the exposure there for Bank of America?
That's a really good question on the corporate side. I think, especially after the banking crisis that we saw earlier this year, I think there's a lot of questions about what higher for longer interest rates mean, not only for consumers, but also for companies who are really coming under pressure. And I think that's why we've seen with a lot of these earnings reports, with a lot of these calls, despite some relatively good figures, the 3 largest banks in America had their best third quarter ever, words of caution and trying to temper down expectations.
Charlie, thank you so much. Charlie Wells there with the very latest on the U.S. banks. Now, coming up, a show of support from the U.S. as President Biden prepares to head to Israel amid the conflict in the Middle East. We'll discuss that next, and this is Bloomberg. The conversations that matter, the insights you need. This is a Pulse, and I'm Francine Lacqua here in London. Now, the U.S. President Joe Biden will travel to Israel tomorrow in a bid to prevent the conflict from engulfing the region. The visit comes as Gaza braces for an expected ground offensive. Well, joining us now is Bloomberg's news director for EMEA, Rosalind Matheson. So, Ros, thank you for joining us. When you look at what President Biden and the significance, actually, of him arriving in Tel Aviv tomorrow, what does he hope to achieve with this?
Well, it really is just extraordinary that he's deciding to go there in this moment after, of course, all the diplomacy by his US Secretary of State. Now we've got the US President flying in very much in the last minute to sort of meet with the Israeli Prime Minister Netanyahu and obviously express strong support for Israel because they are key allies of each other, including militarily. You can expect strong statements of solidarity, of support in this minute in the aftermath of the Hamas attack on Israel, but also he's going to be urging caution, you can imagine, urging the reopening of the crossing between Gaza and Egypt to allow humanitarian aid to go into Gaza, people potentially to move out, and also warning again, if there's a full-scale ground war in Gaza, does that have repercussions for the region? How can they stop this bleeding into the rest of the region, pulling in Iran, other countries, potentially? And so, in a way, his trip, is it buying time? Is it just trying to stave off something that Israel might be doing? Very difficult to start a ground war when the US president is there in Israel, for example.
So it's unclear whether this could be an escalation. I mean, if he actually gives unwavering support to Israel, could that inflame tensions in the region, or does it de-escalate if he manages to get an agreement on the humanitarian corridors?
Well, certainly they're focusing on that humanitarian angle. They're saying they understand the plight of the people in Gaza is quite terrible. But also the US has been very strong in saying they understand Israel's position on this. They're not going to try and persuade Netanyahu against a ground war. They are saying his long-term plan should not be to occupy Gaza, but they're not going to stand in the way if Netanyahu decides he does want to go in. What they're probably trying to do is sort of frame the situation to help perhaps get to the point where we don't see that full-scale ground war. We see something more targeted than what perhaps was planned in the initial days after that attack.
And then, Roz, so Vladimir Putin has called the Israeli Prime Minister. I don't know what was said there. And at the same time, Vladimir Putin is also meeting with the Chinese president tomorrow.
Well, it's very interesting. How many days did it take for Vladimir Putin to call Netanyahu? And when he did, it was sort of general expressions of condolence over what happened, calling for a ceasefire. He did not condemn Hamas for its attack on Israel. So it was a very sort of perfunctory phone call in a way. He also spoke to the leaders of Syria, the Palestinian Authority and others. And so in a way it was sort of a box-ticking exercise by Vladimir Putin, who immediately got on a plane to China, where he's going to be meeting with Xi Jinping tomorrow. And those two countries, of course, collectively have sent the message they don't really want to get involved in this. The US is saying, use your influence to make sure Iran doesn't get pulled in. And the message from China and Russia is this is not really our business. We support a ceasefire, but don't get us involved.
Ross, very quickly, who's the right person to call Iran or to mediate with Iran, China or Russia?
Well, that's the big question. I mean, Russia does have influence with Iran, but economically through oil, China has the leverage. But again, the big question is, like, who do either of them really want to get involved with Iran? There's no sense they do.
Roz, thank you so much. Roz Matheson there with the very latest, of course, on the conflict between Hamas and Israel. Up next, we'll have plenty more on oil. We'll have a full debrief also on what's going on in the markets. Creditors really fighting over, one of our top stories is actually them also fighting over a crown jewel of German real estate. Bloomberg Brief with Danny Berger in London, Manus Cranney in New York is up next. And this is Bloomberg.